Hey, a quick other thing which I missed, and it's quite useful. So something about, again, it's about orders. Let's say it's today, at the moment, it's about 11:45 here in southern Italy. All right, so I'm on Central European time, and I want to buy some US stocks. All right, I want to buy some Zendesk. All right, US tech stock. So say I go to the page Zen, and I go to the trade button here as usual. Okay, so I used to think when I first started trading that I'd try and buy certain stocks, and I'd go to buy them, and then I wouldn't see them in my portfolio, and I'd wonder, what's happening, and I'd rebuy them and rebuy them and rebuy them. Okay, because Zendesk is only traded on the, it's a US tech stock, it's traded on the New York Stock Exchange, I can only buy that when the stock exchange that trades it is actually open. Okay, so it opens at 3:30 Central European time. So at 3:30 today, it's sort of 9 or 8 or whatever in New York, and the market's open. So I have to wait till 3:30 before this I can actually buy it. Now, if it's before that or after that in time, so now it's, I don't know, it's like 4 in the morning in New York or whatever. So if I go to buy it, let's see how much. Hold on. First, I want to see how much I've got in my portfolio. This is the virtual portfolio, 44. So I'm going to do 980.82 just to get it to a nice round number. Hold on. So let's say I go to trade it. I put in my amount, 980.82. That's how much I want to buy. All right. Here it says at market. Now with all of the other assets, you have that drop down we saw. You have the normal one, which is to buy it at the market rate. And then here you have a button which, you click and it says order, like we saw earlier. For some reason on stocks, it doesn't actually do that. It has a different method of doing it. So here we have at market is the standard. So it's this normal at market order, which means I'll buy it at this price. That's the price I want to buy it. If you want to set what we call an order, you have to click the rate button and then you can specify. No, I think it's going to go down. I want to buy it when it's at 32. Okay? Or whatever. So that's how you set an order in stocks. I don't know why they did it differently. Click the button again, it goes back to at market. Now because we're out of hours, because that market, this New York stock market, isn't open at the moment, it's only 4 in the morning, if I go to buy it now, and I want to buy it at market, the normal one, I don't want to set an order, I want to buy it at market, automatically it turns it into an order. Okay, so it's going to turn it into an order, boom, alright, now buy Zen order placed at market. So now if I go into my portfolio, I can't see any Zen, and this is what used to confuse me. I'd go through and think, where is it, where is it? So I'd try and buy it again and think the whole system's broken. As we saw before, this is a history of all my past trades. This one here is my portfolio. Here is my orders. So it's automatically turned that into an order to execute at market. It's turned it into a market order. Because the markets are closed now, it's going to wait. And at 3:30 today, the second it opens, it's going to buy that amount, it's going to spend my money on Zen at whatever price the market is at now. Now it might be that yesterday Zen was at a certain price. So it might be yesterday, if we go back to Zen, sometimes the price changes overnight, you see. So yesterday when it closed it was at 34.68. Sometimes people buy amounts of stock after the market closes and before the market opens. So it might open today and it might be higher or lower, slightly. Usually, unless there's an earnings report, then it can change massively overnight. But otherwise it only usually changes a small amount, unless there's some big news. So when it opens today, the New York Stock Exchange, my order, my at market order, which is here, is automatically going to be bought, and then I'm going to see it in my portfolio. Okay, so if you're out of hours, it automatically uses orders. Here's the other thing I wanted to say. Here now, this is why I did it. You see, I have 44,000. That's why I did that. I have 44,000 available balance. All right, so one of the things when you're using orders is you might be tempted, as I was, to say, well, hold on a minute, I can just set orders for low prices on a range of assets and I'll just leave them there indefinitely. I can just leave them, and if it ever hits that price, I'll buy it at that price. That's got to be a win. Okay, here's something with that. So let's say I go back to, I go to Google. All right, now let's say I go back to Bitcoin, because it'll show you the difference in how you do it again. So I go to Bitcoin, I want to trade some Bitcoin, and I click the trade button. Here's the trade button, okay, and that's the difference. Here it's order and trade. On the stocks they treat it differently. So I go back to order, And let's say I want to, remember now I had in my portfolio, I had 44,000 available. Remember that number. So, Bitcoin. I go to trade, and I'm going to do an order, and I want to do $1,000 of Bitcoin. I think it's going to drop, and so I want to buy it when it's at 7,500. All right, so I think it's going to drop 1,000, whatever, $800. All right, so I set my order for 1,000. Remember, I had 44,000 available. Set my order. Buy Bitcoin. My portfolio now says 43,000. And that allocated will have gone up 1,000. So when you set an order, and I can go now back to my orders, and you can see there's the one that I set, which is going to be opened at market. And the other one is an actual order. This is a market order. Because the markets won't open, it will open it at the market price whenever they open. This one here is an order that I've actually set, limit order. So it's going to buy Bitcoin when it gets to 7,500. So I've invested 1,000. That money I can't use anymore. It's tied up. So the second you place an order, however much you want to spend on that order gets taken out of your available balance, and it's becomes part of your total allocated, so they ring fence it. They take it to one side and they say, all right, that's being used for an order, you can't use that money anymore. It can't be used for something else. We need to put that aside so that when your order goes through, we've got the money there already and we can just buy it straight away. So that's the thing you want to consider. If you place lots and lots of orders, as I said before, your money, you want your money doing stuff. So if you tie all of your money up in unfulfilled orders, especially if, if I had put that, I want to wait till Bitcoin's at 1,000, I could be waiting forever. Maybe not, but I could be waiting a very long time to do that. And whilst I am waiting, it's keeping that money to the side and I won't be able to use it to make other trades. So that's something to think about. Okay.
So if you have got yourself into a situation where you've got lots of pending orders, they're still open and they haven't been fulfilled, remember that they're good till cancelled. That's that phrase that I forgot yesterday. So basically good till cancelled just means that the order's going to stay open, the one that you've set, the pending one, it's going to stay open until either it's fulfilled, so it actually hits that price and it's bought, or until you cancel it manually. Otherwise it's just going to sit there. So let's say you've set an order and you think it's not going to be fulfilled and your money is tied up. Let's say you want it back in your available balance. You can just go to that part of your portfolio where you can see all your orders, go to those little red X's on the side and you can just cancel them manually. Now when you cancel them manually, there isn't a fee for that. You don't get charged to cancel an order. So there we are, you can just get rid of them and the money will be returned to your available balance and you can do with it whatever you want.
So be careful with your orders. Don't just set loads and loads of random orders because it will use all your money up, which is no good. That's it.